Hello and welcome to this week's episode of Nucleus Investment Insights. In today's episode, we'll talk about the rental crisis and its effect on the Australian economy. It's no secret that the Labor government is running the highest immigration policy in history, and this has fueled a rental crisis. This is extremely untimely considering inflation is already high and the other costs of living have also skyrocketed. Today, we're going to discuss not only this, but all the other flow-on effects it's having on the Australian population and the economy. Just a quick reminder, this podcast is general advice only and is not intended to be specific to your personal situation. If you do want to discuss your personal financial situation and how to improve that, you can book a call with me or one of the advice team at nucleuswealth.com/contact. Today, as always, we have Nucleus Wealth's Chief Investment Officer and co-founder, Damien Klassen. Damo, welcome back.
Hey, Tim. How you going?
Good, thanks. Today, we also have Nucleus Wealth's Chief Economist, Leith van Onselen. Leith, welcome back. It's been a while.
Yeah, it has been a while. Great to be back. Thanks for having me.
Yeah, pleasure. My name's Sam Kerr. I'm the Head of Advice at Nucleus Wealth. We are live every Thursday at 12:30 Australian Eastern Standard Time. So jump onto the Nucleus Wealth YouTube channel and you can ask any questions that come to mind and we'll do our best to answer them during the show. We are also available on all other major podcast platforms, so feel free to have a listen there if you prefer also. Just a reminder that the themes discussed in this podcast are a reflection of our thinking that we implement across all our portfolios. So if the themes resonate, you can find out more in the description notes. One other thing, until the end of the year, we are offering a free, no obligation super review. We'll give you a super health check. We'll give you clarity on how you're invested, the fees you're paying, and also the tax saving strategies on offer. So you can book in via nucleuswealth.com/contact as well. So that's the formalities out of the way. Damo, over to you to get the discussion rolling.
Thanks. Yeah, it's been a little while since we've done had a look at properties. So we thought we should check back in, and I think the themes are pretty similar to what we've been talking. Well, what we were talking about last time was this wave of immigration pushing up rents, and I guess the interest rates had sort of largely stopped rising, at least until a month or two ago, and so that's sort of we're really just waiting for the effects of that to start flowing through and seeing what's happening. So. Yeah, with that, let's switch to Leith, and who's prepared a number of charts, and let's talk through what you've got to say.
Yeah, thanks, Damo. Look, you basically have to be buried under a rock if you don't know we've got a bit of a housing crisis at the moment, and it's basically playing out in the rental market. So you probably all read the headlines about massive shortages in rental properties, people being forced out to live in their cars, into group housing, all this sort of stuff, and basically, the root cause of that is effectively a massive population surge that Australia has experienced over the past 18 months. Now, the official demographic data from the ABS is only current to March, so it's about 6 months lagging. But what that showed is that Australia grew by 563,000 people in the year to March, which was off the charts, numbers we've never seen before. And that was off net overseas migration of 454,000. Now, it was only the May budget that the federal government or the Australian Treasury predicted that net overseas migration last financial year. So that's the year to June.
And sorry, just to put this into perspective. So we our longer term average is sort of 80 to 100,000.
Yeah. So it depends how far you want to go back.
Average.
Yeah. So if you want to go back to Federation, it's about 80,000. Yeah. Since the Second World War, it's about 90 odd. Second World War through to about 2005 before it ramped.
Yeah,
was about that. But since but the 15 years pre-COVID, it then jumped to about 220. So we had a massive step up, and now we're running at basically the last financial year. If you use the national accounts population numbers, which was 626,000, and you sort of work backwards from there. We're looking at net overseas migration last financial year of about 500,000. And just to put that in perspective, the highest under the previous government, so the previous, 2000 and they came in 2013 to last year. was 260,000 in 1 year. That was their highest ever. The highest previously before the most recent boom was 310,000 under Kevin Rudd. And we're at basically 500,000, although it hasn't been officially confirmed. So that won't get confirmed until December when the official data comes out, but it's off the charts.
Yeah. So effectively, though, from if you picked, say, from the 80s and 90s or whatever, you basically go, okay, so from about so roughly from the financial crisis, following the financial crisis, we doubled our overall immigration, and now we've doubled it again.
Yeah, basically. So there's a chart there on the left, which basically plots Australia's net overseas migration. It's only to March, obviously. Yeah. All the way back to Federation. You can see it's just launched. And I haven't included this chart in here, but there's often this claim that we're just catching up for lost COVID migration because immigration turned negative briefly. That's actually not true. According to the civilian population figures that are presented in the monthly ABS labour force data, we've already caught back up to where the trend population growth had we not had the pandemic. So we've already fully caught up with the so-called lost migration. And from now forward, from going forward, we're going to be basically running way ahead of what the run rate would have been had we not had the pandemic.
And I think as well, just to make sure we've covered this off, because it's not that we're, and I guess it's not that there's a particularly anti-immigration stance from anyone. All this is about saying is that I guess in my take is that you can look at things and you can say, okay, should we have zero immigration? And I think most people will go, no, we shouldn't have zero immigration. Should we have 10 million people a year immigration? People will go, well, no, 10 million is too much. If we're bringing in 50% of the population every year, we can't possibly handle that. And you're like, okay, great. So all we're doing really is arguing about a number. What's the right number? Because I think there's some people sort of put it out as the thing of going, all immigration is good immigration. And to me, if you've already built, if you're factoring in that you're going to have 10 million people and you're building cities and roads and everything was already done before that and they're rolling up and into the things, great, go for it. But the problem is we're not actually doing that. We're just going, bring people in and good luck. Yeah.
I mean, look, I largely agree with you, but the problem is there is also a natural environment question. And the so-called intergenerational report of the environment, which is called the State of the Environment Report, basically it came out in 2021, comes out every 5 years or so, basically said that population growth is the biggest risk for the environment. So, I mean, you don't have to be a rocket scientist. Like we're structurally short of water everywhere. We've obviously had 3 years of La Nina, so all the dams are full. But, there's already articles coming out left, right and centre across the media saying that Sydney's going to have a severe water problem in 3 years if we have, any kind of below average rainfall. And we're going to have to build desal plants everywhere. So, there is a carrying capacity of the country. And I'd argue Australia is probably pretty close to that already. And the intergeneration report says we're going to grow 50%. So 13 million people, Sydney, Melbourne, Brisbane and Adelaide in just 40 years. That's just bonkers. And it's going to absolutely destroy the environment as well as living standards. So, I mean, people always forget about the environmental impact. And I think that's, it can't be forgotten, that's all. But yeah, I mean, I certainly get your point. My view is that we had a pretty successful immigration program up to about the mid-2000s when we decided to ramp it. So that should be the level. So it should be around that sort of 120,000 a year, which it was in the early 2000s. And that level we seem to be able to cope pretty well. I mean, I can't remember too many people complaining about it around about the Sydney Olympics. But since then, we've just ran immigration too hot for about, really 20 years, just about. Yeah. And that's the problem.
And the big part is it's to me, I've got absolutely no problems running at 500 if we're actually building stuff for it and we're pre-planning for it. And we're actually saying, yes, here's where we're actually out and building new cities and all the extra stuff that goes with it and making sure there's roads and hospitals and all that type of stuff, as opposed to just going, let's just throw it open and let the state worry about it. Because I think that's the other issue. Obviously, we've spoken about before on this, but it's worth reiterating is that federal government gets all the benefits of immigrants in terms of higher tax take. States have to pay all the costs, and you don't get there's no sort of transfer back. And so what states have effectively been doing is selling off assets for the last 20 years to try and cover the extra build they need to do.
And also building, obviously, toll roads and everything. So effectively, 20 years ago, you could drive around Sydney and you paid 2 tolls if you went over the bridge or near the airport. Now there's like 20 toll roads. And that was pretty much because Sydney's grown by 1.2 million people. We've had to basically build tunnels everywhere and toll roads everywhere, which you only need to do because you grew your population like a science experiment. So it's pushed the cost on the state governments, also pushed it on individuals who now are driving in more crowded roads than they did 20 years ago, and they're paying way more to do so. So there's a broader, so it's pushed the costs. So the federal government collects 80% of the tax revenue. They get all income tax, company tax. They benefit from immigration. The costs are pushed on the states, who really have very narrow tax bases, but they also provide all, they're the key providers of infrastructure, health, services, education, etc. And then the way they've done it, as Damo said, is they've sold off a whole bunch of assets. They've also done these public-private partnerships everywhere, so where everything's become user pays, which means individuals, households are then paying the costs. So it's classic privatise the gains, treasury, socialise the costs and everyone else. And it's the same, big business is the same, the property developers do the same.
Let's come back to that. Sam, we might go to you, Sam, quickly for a quick message, and come back to that.
We'll be back with the investment insights very shortly. Nucleus Wealth is an active and passive investment manager. If you like what you're hearing and want some help with your investing, we can do it for you via our active portfolios. Our tactical and core portfolios use the insights shared in this podcast to construct and manage your investment. We blend tactical portfolios to offer our combinations of international shares, Australian shares, government bonds, and cash. We vary the asset allocation with the goal of protecting your capital in times of market uncertainty. We also have active international and Australian share portfolios. These are chosen using our quality and value investment philosophy. You can find out more at nucleuswealth.com. Now back to the show. You're on.
Right, so we might go. Let's talk quickly about the company part before we go to some more of the drivers, because it's an interesting. It's the whole part about, they say, with a lot of most civilizations over time, and as you build up sort of systems of government, the problem you always have is vested interests in the people who do really well out of it. Then get in and start paying politicians or supporting all the politicians in order to make sure that the next group of people can't, the next thing doesn't start up, and so constantly you sort of look through all these different technologies over time. They spoke about things like the spinning loom sort of coming up in England, because actually they didn't have really strong guilds that they did in other countries, in France and Germany and Italy. So that was why England was great for it, because he didn't have all the vested interests, and so that's why it took it off there. And then once they were in, though, then they started paying the politicians and wanted to make sure that, so the next generation came back in a different country. And so there's a lot of that about this. And in Australia, the problem is that obviously that so many companies that are doing well from this population one, in that if you're a supermarket or big box retailer like a Harvey Norman, where you're selling things to people with new houses, and you've actually got a bunch of the best locations. And so if you can jam more people around your store, then great, you get to sell more in your stores. And so they're all the people that are in, donating to our politicians. And so the companies that do well are the ones that keep doing well. But the question is how long we can keep playing this out. And so, I don't know, back to you, Leith, on companies and your thoughts on who's benefiting and who's not.
Yeah, so there's basically three big, I call them the growth lobby, who love to push for this. So you've got basically, as Damo said, big business. So it's all, your oligopoly enterprises love big migration, easy way to grow your profits, because you grow your customer base, you've got more people to sell to.
Yeah,
you can also put
retailers and property developers, not as much. If you're a manufacturer, or if you're
no, but
it doesn't help you. And
but banks would like it. It's banks. We always see, as you said, Jerry Harvey's a classic. He loves immigration. High Rise Harry Triggerboff is always talking about it. Just obvious stuff. And it also means that you can also put downward pressure on wages, because you bring in all these people from overseas, and then they obviously compete with the local workforce, and et cetera, so you can basically get higher customer base and potentially lower wage costs. So it's a win-win for them. The other crew that's developed in the last sort of 15 years is I call them the education/migration industry. So basically, universities have now become a key rent seeker in this through the foreign student trade. So our universities are untaxed. We've got vice chancellors getting paid over $1 million. We've got massive bureaucracies now in there where we've got very high paid people, and they effectively try and bring in as many foreign students as possible. Don't have to provide housing for them. Don't pay tax on the income that they get, and then obviously, a lot of the benefits get paid out to the sort of senior administrators, etc. So
yes, and we've had Salvatore Vivonis come on this podcast in the past, and if you want to look up some of those episodes, it talks a bit more about it. But yeah, he said big picture really is that we started with a bunch of universities who are educating Australian students and international students as well. We threw it open and said, you guys can bring in as many international students as you like. And effectively what they did was they grew all their sales part. They all their management and admin staff all got massive pay rises and all turned into, as I said, I think average salary went from 200,000 or 300,000 for a chancellor to well over $1 million. So, and you basically just created an industry of people that are hyper focused, not on educating, but just on bringing as many people in as possible and making as much money from them.
Yeah, and it's also been facilitated by the federal government. So they had this thing called the Knight Review in the early 2010s, and they basically said, in order to make Australia a more attractive destination for students, we're going to give away have the most generous work rights and residency in the world, and that's what they did. And surprise, surprise, we just got fire hosed with them. And we saw basically this current immigration boom that we're seeing right now has been deliberately engineered by the Labor government. So you might remember September last year, they held the Jobs and Skills Summit, and they got 100 delegates from around the country. Pretty much all of them were big Australia shills, and they came up with a fake consensus to say we need more immigration. Surprise, surprise. And then they went ahead and loosened all these visa entry rules for students. They extended post-study work visas. They came out and spent $42 million to employ 600 staff in the Department of Home Affairs and Immigration to basically rubber stamp as many visas as possible under this pretend 1 million visa backlog, which they made up. They raised the permanent migration intake by 30-odd thousand. They raised the humanitarian intake, which I don't really have a problem with that one. But they also approved 66,000 these pandemic visas. So these were visas that were supposed to be handed out over the pandemic just to keep people who couldn't go home in the country for a bit longer. Labor's handed out tons of them while the pandemic's been over. All this stuff, they signed 2 migration deals with India to basically give them mutual recognition on their qualifications and also longer post-study work rights, etc. Yeah. And so basically they've opened the floodgates, and this is a classic reason of why we're just seeing so much migration at the moment. So, I mean, I'm a bit disappointed. I was hoping the pandemic might have actually got us back to the migration levels we saw sort of in the early 2000s, which worked. Instead, they've gone whole hog and they've said, we lost this migration in the pandemic. Let's get it back as quickly as possible. And it's rebounded way faster than they ever imagined.
Yeah.
And this is what's caused the rental crisis.
Yeah, sure. Now, in policy circles, so I guess there's this part about, okay, great, we're complaining about it. So, but, and we can see where the investment, who's benefiting from an investment side, and genuinely, companies like Transurban are the ones that, we've got those in our portfolio. And so they're these ones where you're like saying, look, I don't like the effect of this, but there's a point where you say, well, if that's the way policy's driving and that's the way it's going to keep going. So in policy circles, are we seeing any signs that of any pushback? I mean, you see a few complaints about, in the tent cities and things like that in the press, but it doesn't seem to have a lot of traction. I guess there's this idea that, yes, there's a rental crisis and we're running record levels of immigration, but linking the two seems to be beyond the wit of most of the commentators. And so are you seeing any signs that might be reversing, or is this just what we're
certainly the coalition started to make a few noises about it, but you're right. I mean, it's all been about gaslighting at the moment. So basically the government policymakers, housing commentators, etc., all trying to claim it's a supply issue, which is the biggest load of hogwash I've ever heard. So they're trying to. There's a chart.
Let's come back to that, because supply is a whole different one, and we'll move back to that. So I guess I'm more interested, just before we get into the supply. So I'm more interested in just saying, is there? Yes. So it sounds as if from what you're saying, you said it's gaslighting. There's no real, there's no sort of growing support for saying, hey, we need to wind this back. And so
a lot of anger in the electorate, though.
A lot of anger, yeah. So it looks like this is what we're locked in for the foreseeable future.
100%.
As I said, the coalition, which is a little bit weird in that the coalition actually was running higher, like they sort of basically say that they're not going to have immigration and crack down hard on illegal immigration, but then run really high levels of legal immigration was their modus operandi over the last time they were in power.
Yeah.
So now, as you said, they've started to make a few noises, but is it a commitment to lower, do you think, or is it a lot about saying, it feels to me that what they're effectively saying is, if you're angry about the levels of immigration, vote for us, and we'll do a little bit of stuff around the edges, but you probably get the same effect.
I wouldn't expect a revolution here. I mean, look, it's true. The last two Labor governments, so this one and the previous one, have ran higher immigration than the coalitions, but not by much. Like it's we're talking about it's like big Australia or massive Australia,
right?
So it's like pick your poison. And it'd be pretty easy for them to argue just for a bit lower, but it's still and historically be massive.
Yeah, and neither of them are saying we're going to revolutionise the way supplies. We're going to go out and build all this extra supply or do something. They're all just saying, there's a problem. It's not our fault. Blame developers. Blame local governments. Blame NIMBYs. Whatever. There's no real. Yeah. So as bad as what we're saying, as bad as what you're saying is, from an investment perspective, this is a hand we've been dealt. We've got to play that hand. We can wish we had a different hand, but it doesn't look like anything's changing.
No, of course not. And look, again, it gets down to these. We've got just such big lobby groups that are involved, pushing this stuff. And also, unfortunately, Australia can't debate this stuff, because as soon as you do it, you call it racist. And it's just this. It's just stupid. Like we're talking about numbers here. So why can't you debate a number? It's just ridiculous. But anyway, so we're basically locked in, unfortunately.
Yeah. Okay. So let's go to supply then. So what's happening on the supply front?
Yeah. So anyway, there's some charts here. So basically, obviously, we've got record migration flows, driven by record numbers of students that were off the charts we haven't seen before. And at the same time as we've got this record immigration, I've done a chart here comparing dwelling completions versus population change. Actual supply levels have tanked to basically, decade lows. So it's going all the wrong way. And of course, I've got a nice chart there too. This is from Shane Oliver, just showing that basically rents have gone through the roof. It's actually higher than what he's got in that red line.
Sorry, before we get to that one, can we just talk about this dwelling completions one? So, so just big picture terms, we've got about 2.1 or 2.2 people per house. I think is about right, isn't it? Maybe it might be a little bit higher than that.
It's higher than that. It's 2.6. 2.5.
We've got 10 million houses. Yeah, 10 million houses and 25 million people.
26 million. Yeah, but close enough.
2.5, 2.6. So if we're going to bring in 500,000 people, you want to be building about 200,000.
You've also got to account for natural population increase too, though. So basically, it's more like running over 600 at the moment.
Right. Okay. So in order just to keep run still, we should be building 250 odd houses maybe to keep up with where we are at the moment.
Yeah, and you also got to account for demolitions too, because about 8% of houses completion knocked down and rebuilds.
Knockdowns. Yeah. Okay.
And rebuilds,
So you subtract one and add one. Okay. So if that's the case, so maybe we want to be running at closer to 300,000.
Yeah,
and we're running at 170. So we're about half the number that we need to be. Well, maybe not half, but probably 40% lower than what we need to be.
Yeah, and just the highest, Australia's only ever built over 220,000 homes once, and that was in 2016, I think, when we built 223,000. And you can see that in the chart on the left, the blue line, dwelling completions. Now, this whole notion that it's a supply issue is a bit of a laugh to me, because as you can see, we had an unprecedented building boom last decade, as shown in the blue line. Problem is, we had, 10 years before that, the population growth surged of immigration. So it's actually a demand issue, just through this too high immigration.
Well, and in big picture sense though as well. So we had this level of population, as you see this blue line, if you draw a line through that and you go, okay, it's sort of 150 odd thousand houses or whatever that was being built. And then you go, okay, now we double the population in the 2000s. So we need to sort of, that needs to ramp up to sort of 200,000 or whatever it is, which it sort of does. And then
Only
now
for a
we've
dip.
doubled again. So you'd actually sort of expect that line needs to go from 200, as we said, to closer to 300. But instead of going up, it's going the opposite direction.
Yeah, and obviously the homes we built in the last decade when we had that boom were mostly apartments, right? So they don't hold as many people. A lot of them are shoebox, obviously very poor quality. Like, we've heard about these flammable cladding, balcony defects, mascot, opal towers, all these sorts of things. So this is another problem. If you want to ramp up housing supply, you want to do it super quickly, you're going to have to degrade quality. And we saw that last decade. So if we're going to do it again, you're going to get poor quality again. That's just the way it works. If you're going to fire hose the place with building, you're going to cut corners, and that's what we got. So again, it's like the solution here is just temper. The whole solution to the housing crisis is pretty damn simple. An immigration program that is below the nation's ability to supply housing and infrastructure, as well as safeguard the environment. And we're not anywhere near that. We are so far beyond that.
And Leith, you obviously write a lot about this on Macro Business for anyone who wants to get more hit that up. But I guess because for me, the part I'm looking at here is going, okay, well, we need, like, it looks like we're locked into saying there's going to have to be a, just based on where we are today, we need a dwelling boom in terms of construction boom.
We're not going to get it.
That's not coming. So if we don't get it, then we're looking at much higher house prices and much higher rents.
Homelessness. All of it. And Damien, just to interrupt. So the reason why we're not going to get it is pretty simple. We've got obviously higher interest rates, which makes it hard. We've got builders have folded left, right, and centre. So we've actually got less capacity. We've got obviously structurally higher materials costs now because of this inflation we've had. Materials inflation has come down, but it's still high. And so it structurally costs more to build a home than it did, 2 years ago. So that's going to obviously crimp supply. And we've got a shortage of builders. So the whole supply side is basically, constipated at the same time as we're fire hosing demand. So this whole notion, so the federal government actually, the National Cabinet 2 months ago, said that it came up with this brain fart that they're going to build 1.2 million homes in 5 years. That's 240,000 homes a year. Now to get that, we're at 170 at the moment, right? So we're 70,000 below that annual figure, the run rate. We've only ever built over 220,000 once. We built 223,000. So we're going to magically, over the next 5 years, ramp up construction to a level we've never seen before, at a time when we've got structurally high interest rates, structurally higher materials costs, shortage of labour, and we've got less construction firms to actually build it. You don't have to be a rocket scientist to know that this is an absolute joke, and that the housing crisis is going to get worse. I'm just calling it straight.
No. I think, and so from and there's a couple of effects from here. Is that for investors is, as we look at this, is that okay? So there's a macroeconomic part which is saying people who have existing houses, their house prices go up. Existing landlords, their rents go up. And so that's a group that benefits from that. And then there's the everyone else. So if we sort of split our economy into thirds, I think as they like to say, you've got a third renters, a third owners with little or no mortgage, and a third with mortgages. And so what we're looking at is the third with mortgages and the third that are renting are going to cop it, and the other third that don't have are going to do well out of it, and
they're generally older.
Chances are they're the older. Yeah, that's right. We've got the older, and so who tend to spend less. So in terms of demand, you expect that demand overall in that scenario is going to be lower for consumer goods and other things, juiced by the fact. So that's from existing people, juiced by the fact you're actually going to have all this record immigration through. So that's going to offset that. So maybe net you look at sort of discretionary consumers and go, yeah, maybe that's actually a slight positive for them in that everyone's buying less, but actually there's a lot more people, and so the net effect is maybe a little bit better. And then though from a and then from an overall part is that per capita is going to be pretty bad, but actually the gross amount might be all right. So and then which sort of speaks to more political instability. We've had enough. Had a lot of different prime ministers over the last 10 years, and it sounds like
it does look like this current administration is following the path of Kevin Rudd. right? So, Kevin Rudd was popular for about a year or so, and then obviously he said, I'm a big supporter of a big Australia, and I was like, plus obviously the mining tax debacle, but it does seem to be similar to that. But you're 100% right. We've got obviously the economy's growing very weakly at the moment, but we are in a per capita recession, so we've had 2 consecutive quarters of negative growth. We've got household consumption's growing very modestly, but again, it's negative when you adjust for population growth. Sorry. Yes, I'm talking about real household consumption.
Oh, okay. Yep.
Yeah, and same with retail sales. All this stuff is going backwards once you adjust for that population growth. So basically, the overall economic pie is growing pretty poorly, but everyone's slice of the pie is shrinking, and that's basically a recipe for political discontent. And we've seen it with our Treasurer Jim Chalmers has basically been gaslighting everyone, saying that boasting that they've had the highest wage growth in a decade, when actually real wages have fallen back to 2009 levels.
Yeah, right.
Like stupid. Well, and then he's also boasted that we've created 500,000 jobs in the last year, when actually we've had more immigration, more labour supply, because also not just immigration, we've also had obviously Costello's baby bonus kids are now turned adult age. Which is also adding to the housing market.
Yeah. So what he's saying is, he's not lying in saying we've got the highest wage growth, but
he's pretty dishonest.
The highest wage growth in terms of nominal wage growth. But what he's saying is,
lying, mate.
Because we're running such
no one ever talks about this stuff
because we're running such high levels of inflation that you're actually dumb. Yeah.
I personally think he's lying, because we should be talking about it in real terms. But I guess he's been
disingenuous.
Disingenuous. Yeah. That's probably the fairer way of saying it. But I call it lying.
Yeah. Okay. Well, back to you, Sam.
Because he knows. He knows.
Yeah. Back to you, Sam, on another message.
We'll be back again shortly. If you like what you're hearing but want a low-cost passive option, Nucleus Wealth is the first to offer passive direct indexing in Australia. The first generation of passive investing was index funds. The next gen was ETFs. Now direct indexing is here with significantly more customization and control. The benefit of direct indexing is you can add or subtract investment themes, and we have almost 100 different options to choose from. For example, you could buy an international share direct index portfolio that excludes fossil fuels and arms manufacturers and has a tilt towards cybersecurity and cloud computing. Alternatively, you could buy a portfolio with no screens and an extra exposure to nuclear power and defense contractors. You can find out more at nucleuswealth.com. Now back to the show. So we've had a couple of comments come through. It's obviously a hot topic. We've got one from James John, and he's saying immigration is also a big problem in Europe and North America, with a high intake of people to countries that are in recession, for example, Italy. And he's wondering if there's a directive for Western countries to take more people. Anyone want to comment on that one?
Yeah, well, I mean, I'll comment on the immigration flows. I can't comment so much about Europe, except that I know the UK is running at record high levels. But Canada, for example, if you're an R, immigration's nuts. Canada got 1.2 million over the past year, and that's obviously a country that's about 40 million people, so it's bigger than us, but not that much bigger. And 97% of that 1.2 million population growth was net overseas migration. So they're actually suffering, copying it even worse than us. And they've got a similar rental crisis. They're also in a per capita recession. And basically voter support for Justin Trudeau, who's there, and the Liberal Party, which is their equivalent of Labor, I guess, is basically, voters are revolting against that administration, and he's basically under the pump. And there's a big backlash brewing there. New Zealand is Canada's a little bit ahead of us. New Zealand's a bit behind us. So New Zealand has just had their highest ever immigration, and they've just got a new government coming who's basically, promised to ramp it higher. So we've got this kind of all the Anglo nations are basically going hog wild for this really high immigration, and it's causing similar problems in Canada. New Zealand's been a bit lower for a while. They're already in a per capita recession, and they're going down the same path. So it seems to be a Anglo, centric issue that's happening across the board.
Yeah, well, but I think US isn't running as high as what they have done in the past. Yeah, it's been a little bit slower there. Yeah,
I guess the English Anglo countries are,
yeah.
I mean, the ones under the ones in the Commonwealth.
Commonwealth ones. Yeah.
And is this all just a desire to boost GDP? Is that what's driving it?
Well, that's what I wanted to jump in terms of a directive. So I mean, there's not a directive from a secret cabal controlling us.
I don't believe any of that stuff.
But I do think I do think politicians learn from other politicians in other countries, and I think Australia got a lot of kudos during the recession, during the financial crisis for not falling into recession. When really a lot of that reason why we didn't was because we brought in a record number of people.
We did, yeah. It was 310,000 that year.
Yeah, and I think
at that time was a record.
Yeah, and I think what happens is that politicians learn from that and they go, "Hey, no recession, so I can either prevent recessions from running good economic policy, or I can just flood the market with immigrants, and my corporate sponsors will love it, and corporations obviously they learn as well. So corporations, my operations in Australia went really well because we flooded. I had the few good store locations, and then all of a sudden the population around those stores doubled, and so I sold more stuff. And so let me try and convince politicians elsewhere to do the same thing. And so so I think in terms of directives, no, I don't think there's any directives, but I do think there's the incentives for politicians to do it, and the incentives for corporates to pay politicians to have those policies, or I guess to maybe not pay might be overstating it, but certainly to direct donations to politicians who will support those policies means that a lot of Western countries I think have got that similar incentives.
It's a lazy way to grow, so it's an easy way to paper over the cracks.
Yeah, that's right. And we know politicians
always take the easy route.
Yeah, exactly. So prices. Let's talk about prices.
Yeah. Okay. Now, basically, this immigration boom's basically broken pretty much all house price models. So, before a year or so ago, the RBA released research and their own modelling, and I think Chris Joy at Coolabah Capital's done his own, and etc. And they all pretty much showed that if interest rates rise by, I think it was 300 basis points at the time, we basically get a 15 to 20% fall in house prices. And it seems pretty logical, right? If you lift interest rates, basically borrowing capacity shrinks, and also obviously the cost of financing goes up, so that reduces demand directly. Now, obviously we've had 400 basis points of official cash rate rises. Actual average mortgage rates in Australia have risen by almost, one of the highest in the world, because we've got so many variable rate mortgages and short-term fixed rate. So we've seen, average mortgage rates rise by nearly 300 basis points. And based on that, I was one of them as well. I was expecting not necessarily 20%, but, expecting a pretty hefty house price fall. And instead, guess what? House prices are back to their peak before the RBA started hiking last year. And it's basically caught everyone off guard except for, say, Stephen Koukoulas. So I got to give the guy his flowers. He was one of the guys pushing back against this. And basically we've got, despite the fact we've had such high monetary tightening, borrowing capacity shrunk by 30%. House prices are basically back at their peak. And it's all because we've got this massive shortage of supply. The actual listings, number of listings has fallen, shrunk, running way behind, about 25% below the 5-year average. At the same time as we've obviously got all this extra demand through immigration, we've got soaring rents, so that's created FOMO, because people who either can't find rental properties or seeing this huge inflation are basically encouraged to try and stretch themselves to buy, et cetera, et cetera. So it's really counterintuitive, and it's one of the very few booms in the last 30 years, house price rises in the last 30 years, cycles, that have gone against the interest rate. So usually it takes interest rate cuts and borrowing capacity to rise before you get a house price rebound. This time is unusual in that we've had quite a strong rebound, despite the fact that, interest rates have gone up so aggressively and quickly. And we're still, arguably, this average mortgage rates are still going up because we've got people still rolling off these cheap pandemic fixed rate mortgages. So it is a scenario I've never seen before, and I wouldn't have picked it a year ago in a million years. But then again, I wouldn't have picked this level of immigration a year ago. It's off the charts.
Yeah. Okay, so let's go to what that means. So you spoke a little bit about the mortgage rates, and it's worth coming back to considering for Australia the fact that we have a different structure to our market than the rest of the world. And so you've got a chart up here from the one of the RBA packs. Yeah, just sort of showing how the policy rates have risen. So say the US, from 0 up to 5%, over 5%, whereas Australia is sort of capped out at 4%. But when you look at the next chart, which is what's the rate that consumers are paying, you can see Australia is actually right at the top. So Australia's
at the bottom.
Yeah, we're at the bottom of one of these and at the top of the other. And yeah, the US, because they have 30-year mortgages, and even the UK, where the average mortgage tenor is a lot longer, you can see they're still, there's still been a much smaller change in the mortgage rate in both those countries.
And what that means is that obviously Australia is one of the most interest rate sensitive countries in the world because we've got so many variable rate mortgages, but also because we hold the second highest debt load in the world. For our households, we've got the second highest debt in the world behind Switzerland. So if you look at the Bank for International Settlements data, so we've got very highly indebted households and we've got a very high share of variable rate mortgages. And because of that makes us really sensitive to interest rate rises. And because of that means that house prices should have fallen if you trust the models, based on this, huge shrinkage in borrowing capacity and also et cetera, et cetera. So, but instead they've rebounded back to the peak already, which is extraordinary. I didn't think I'd see this in my lifetime. I might never see it again.
Yeah. Okay, so I might jump to some of the affordability stats that we run, and I'll have an updated version of this in the next day or two. So just to put this in perspective, so the way we tend to look at it from the investment side is trying to get a feel for, what are the alternatives? So your original type things with houses about saying, well, it's all about the yield and the return you're getting on the house, sort of what goes out the door a little bit, because there's an investment return you can expect to get on an asset based on, how much is the what type of yield are you getting on it, and how fast is that yield growing. So that's how you value most traditional assets. The problem with houses is people have to live somewhere, and so that's sort of you've got this overlying part, which is part investment, part lifestyle. And then what we've done is separated into sort of 3 different parts and said this is what in our view is going to drive house prices. And as Leith said, that sort of the immigration side sort of throws a spanner in this works, but you basically say for one side is saying the first part I look at is what's your mortgage payment versus your median wage. So can people actually afford to pay for mortgages? And so if we're looking at Sydney houses at the moment, we're at 100%. So basically it's cracked the triple digits. So your median wage in Sydney will meet your median wage payment. And so with nothing left, so you obviously need, and sorry, this is pre-tax as well. So it's at that stage you're far beyond affordable. In history, we peaked out at last time when there was sort of 17-18% mortgage rates back in the 80s. It sort of peaked out at 70%, 75% ish, and the typical level is sort of closer to 50%. So affordability is certainly on that front is at never seen before levels. And look, Sydney is the worst of the markets, but it's a similar trend you see around the rest of the cities, and you can grab all that data from our report. In terms of mortgage payments, so that's the other one we look at: mortgage payment versus rent. And this is this idea that's saying, well, when people look at what they're going to buy or what they're not going to buy, it's the idea if I'm paying $1,000 a week in rent and I can buy a place and get a mortgage, it's only going to cost me $800 a week, then I'm incentivized to do it. If it's going to cost me, $3,000 in mortgage costs, then I'm less likely to want to take the mortgage out. So sit on that basis. Sydney sort of, it seems it bottoms out around about 100%. So basically, whenever the cost of a mortgage gets below the cost of renting, it seems to flip the other way, and you get you get the price rises. And in the past, it's topped out around about 170% in terms of, so that basically saying a mortgage would be 70% more expensive. So if I'm paying $1,000 a week for rent, an equivalent mortgage would be $1,700 a week is where it sort of tops out at the top of every other cycle. We're well over 200% in Sydney, but the rapidly rising rents has sort of improved that number, I guess, and made it look better, I suppose, in a way, but it's still at sort of, it's at the 99th percentile. So extraordinarily expensive on both those measures. And the final one, which we think's it's important but less important, is this idea of the property price to the median wage. And the reason why you look at that is saying, well, people have to be able to afford a deposit. But once you've got the deposit, and whether you get that from, beg, borrowing, stealing, bank of mum and dad, whatever it is, the top two are the more important about, can you keep it going? The first part is sort of important in terms of that the property price, but far less important than can you keep up with the ongoing payments. And at that point, that's a little bit lower than its peaks, but it's still certainly pretty high. If you look at Sydney units on a similar basis, so they're sort of running at about 50%. So that's actually the units haven't reached the same height. So if you look at units versus the median wage, they haven't reached the heights you did in the 80s, late 80s. But having said that, a lot fewer units in the late 80s and a lot more now. So, you do have to take a little bit with a grain of salt. So, I mean, it looks expensive on this basis, but it's not like record expensive the way houses are. And then if you look at the rental growth side again, it's what's your mortgage versus versus the median wage? Again, it's expensive, but it's not at the 100th percentile. It's sort of the 83rd percentile. So you said, quite expensive, but not dramatically so on the unit side. So I've got investment measures. I'll just touch on the investment measures. So this is where you go, what's your gross yield? So gross yield, I'll keep in mind, doesn't include all your running costs and things like that. So that sort of ends up, once you get, once you knock those off, it's pretty close to negative on Sydney houses. But so we're at 3% on that. And it also doesn't account, the other thing to remember with whenever you're looking at these as an investment measure is that houses have this, houses and apartments have this ongoing depreciation issue in that, I put a new kitchen in and it cost me 20 grand to put the new kitchen in, but that's depreciated every year. And in 10 years, I'd have to put a new kitchen in and carpets and all that type of stuff like that. And you don't see those in these yields. So it's not like it's not fully reflective of those. If you look at the yield less the mortgage rate, it's not as terrible, I suppose, but it's still not good. It's sort of like now you're running at negative 4%. So basically what it's saying is yields about 4% lower than the mortgage rate, which that's only slightly below average. We've quite often have we seen yields far below the mortgage rate, but so it's not sort of particularly atypical where we are, but it's it's not on an absolute measure, it's not particularly good. So really, I guess what I'm saying, and I've got similar measures for units there, which look a little bit better, but not particularly, is that from an investment perspective, it really is a bet on capital appreciation still. So if you want to invest in the next little while in houses, from looking at yields and returns on those, they don't look particularly attractive. But if you've got the view that actually the people are going to keep pouring in and you can't build fast enough, and so it's going to be forced up from that perspective, then the current rates they're not at all-time lows. Yeah.
Okay, now we have our question of the week. So this is for viewers to have some discussion in the comment section over the coming days. So the question for this week is, are there any signs that immigration will slow? So feel free to post your thoughts and engage with us and some of the other viewers over the coming days. Leith, I think we know your answer already.
No. Look, honestly, I think it probably will slow a little bit, but it's going to remain at high levels, is what I'll say. Mm-hmm. I mean, it can't remain at the current pace for it's going to turn, but it's going to be very high.
Yeah, but and so you'll have an announcement at some stage where Leith at Albo will come out and say, "There's a rental crisis going on. I'm going to slice in immigration. I'm going to take 100,000 people a year, out of our current thing. And
Still
now
be
we're back to
at record levels,
exactly,
excluding the level we just had.
double what it was over the prior periods or whatever like that. So
we'll get something like that.
They can do that a lot of times.
Yeah.
So and so investment implications for me is really about it's about the consumer discretionary side and saying that, look, where are we picking the points in the cycle? So are we going into a stage in the next year or so where we will see recessionary implications? And there's so we've got this short-term issue about, will there or won't be recessions within Australia and the ongoing factors. Beyond that, though, and sort of looking over a longer term, and if you're talking about it, accumulating assets into your portfolio and sort of averaging over time, is that based on where the current policy settings, there still is some support for some of these more discretionary retail. With, again, just making sure I've got that disclaimer that in the short term that you may well have some issues over the next year or so. But the longer term pressures are that until we see a change in these policies, which don't look likely, they'll still benefit. Similarly with some of your utilities, things like Transurban and ones like that, in terms of people who will benefit from this population crush. So a lot of it's the people who sort of benefited before. Obviously, there's timing and prices and all those types of things you'll need to look at. In terms of overall Australian economic growth, it does. We do have concerns about the level of bankruptcies and a few other factors coming over the next year or so. But beyond that, over a sort of 5 or 10 year period, it does look like a reasonably conducive investment environment in terms of, will we see companies manage to grow their profitability on the back of crush loading? And so is it good for individuals? No, it's bad for individuals. But will we see that, will the net effect of that be, a broader economic growth because you are jam-packing people in and existing companies will benefit from that. So, Leith, I don't know if you've got any thoughts on.
I just laughed when you said, profit
bad for individuals, good for companies.
Or profiting from crush loading. That just sums it up beautifully.
Yeah.
Yeah, and just one other thing I want to add in, guys. The viewers would have heard we have around 100 different screens and tilts, so you can either add things into the portfolio or take them out of the portfolio. So, if you're bearish on the Australian economy in the short term, you can exclude Australian shares from the multi-asset portfolios. You can exclude Australian banks and limit Australian housing exposure. If you're bullish on the Australian economy over the long term, we do have 2 portfolios specifically targeted to Australian equities. So there's a core Australia portfolio, which is an actively managed portfolio, and also the Australian leaders, which is the direct index passive portfolio. Feel free to check those out on nucleuswealth.com as well.
And in both those, you can add or subtract things as well. So if you want to add extra exposure to particular sectors, consumer discretionary or something like that, you can add that in or take it out, depending on how you see things.
Excellent. So that pretty much wraps us up for today. So Leith, Damo, thank you as always for sharing your views. I'm sure they resonate with many people out there. And we look forward to having you on again soon, Leith, and continuing to tell the story.
Cheers. Anytime, guys. Just send up the bat signal.
Excellent. Thanks, guys. So we do welcome your feedback on this podcast, especially in regards to suggestions for future topics. If you do have any ideas, please drop it in the comment section below, or you can send us an email at contact@nucleuswealth.com. Also, if you know of anyone that might get some value out of today's episode, would really appreciate it if you do share it with them. So that pretty much wraps us up for today. So from myself, Damien, Leith, and the rest of the team at Nucleus Wealth, thanks for watching, and we look forward to seeing you next time. Bye for now.